Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, January 27, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, we had a big gap down. Overnight, we have the story attached to it that has to do with the Chinese AI DeepSeek or whatever that is. That's the story that the media latched onto, became the reason for the market it being down. You can believe whatever you want. We're going to go with the markets are down, and as taught in the MSF Masterclass, along with a whole lot of other things in the cycle section, we talked about a schematic for the year. And we talked about when I would be looking for a low to occur. And it certainly wasn't in January. So what we ended up having was, we can call this a double top, we can call it a spike through and failure, a false breakout. You can call it whatever you want. It doesn't make any difference. It doesn't change the fact that the market tried to make a new high and has yet to be able to sustain price above that high. Now I'll show you something a little interesting. Here's a chart of the ES. The front month is March, and you can see here the market never made a new high. So this is call it a negative divergence to the SPY or SPX. Let's take a look at the SPX and see what happened over there. Just like the SPY, the SPX made a slight new high, but the futures never made a new high. It's interesting information. We collect interesting information. Traders that watch the ES on a regular basis are aware that they were not making a new high. Now, speaking of the whole Chinese AI DeepSeek situation, the lazy swing trader automagical algo system was long KWEB or Crane Shares Trust, the China Internet ETF. How did she know to be long China? The average entry was 28.40. Exit today, profit alert, first target profit, $30.86. The rest is now a risk-free, emotionless trade. Lazy swing trader automagical algo system. It's been on a bit of, as we say in the trading parlance, a bonanza. Here's another one. Profit target today. Same deal. Lazy swing trader automagical algo. KMB getting a nice big rally today in a very down tape, I might add. First profit taken. It is now a risk-free, emotionless trade. Now, the big down day in the S&P was a little bit of an anomaly because we did have the Dow, which was up today. So there were things that were up. This was really a tech-driven sell-off. We'll get to in a few minutes. The QQQ or the Nasdaq's really got smoked. One more profit target hit today, turning J&J, Johnson & Johnson, into a risk-free, emotionless trade. In at 145.48, first profit taken 151.35. It's a base hit. Base hits put you in the Hall of Fame. Lazy swing trader automagical algo system. Getting back for a moment to the SPY, the S&P 500, we turn over to the weekly chart, and is there really anything wrong with this chart as it stands? And the answer is no, not really. She's above all the moving averages. The trend is your friend until it's not. Came close to, but not touching the 20-period moving average today or home base, finishing with a big bounce at the highs today, so that can't be a negative, but yes, it was still a 1.4% down day. Is this a bearish pattern setting up for another leg lower tomorrow? Can we read it like this? This is your flag-ish situation, and then you have the pole that is the gap down. So the pole comes from the top, and you have a bearish, flaggish situation. That generally will result in a move lower. Now, what if you break the chain? You get above all these highs from today and you start climbing up the invisible pole here. That's the gap. That breaks the chain, and that brings something different into play because we may have a pattern inside of another pattern. What happens if we do this? What happens if we say, hey, from the low today, we had a nice big rally, and then she ate time off the clock, never making a new low, so this is inside of a big time break-up candle, and this is building energy to bust higher for another leg higher into no man's land, which is beginning to climb the invisible pole, which is the gap that exists between today's high and Friday's close. See how that works? Depends on how you want to look at the market. I recommend you look at the market from both directions. That's how you become an umpire calling balls and strikes, and that's how you find success with the markets. What about inside the numbers? Did anybody make money today in the live room? Inside the numbers, I know there were. Post a comment under the video. Let traders know this is a place you can find success. Be proud of the fact that you found a place you can make money. It was a happy Monday. Wake up to what's called a smash and grab as the overnight crew took the liberty to kill the tape, driving the S&P futures down around 150 handles. We'll cut right to the chase and put 591.70 on the board as an early pivot. That turned out to be too low. We have other numbers that came out as the morning grew on, such as the bulls are looking for a rescue operation where they would need to recapture 597. So we know 597 is going to be important. Now we're getting somewhere right smack in the middle of today's activity. 597 all of a sudden smells pivotish. Let's go up and see what we have as the morning grows on. Early morning update just to keep things in line. 597 is an important number, and this morning will be our bull pivot. Told you it was pivot-ish. 597 is now in green, bull pivot. It's overhead resistance, and if she were to begin closing candles above, the next leg higher would be on the table. The flip side is 593.80, which can be considered a bear pivot. 593.80, that was in the live room, for example, and later inside the numbers, that was our buy area. That's what I was looking to buy the market at should they have made a new low today, but they just bought them up at the open, and they never gave it a chance to test 593.80, give or take. Doesn't mean there weren't trades in there. There were. Just saying what the preference was for the early buy. And we're moving along. Let's see what we have at 9 o'clock. The early scoop. If they pop them up somewhat, 597 becomes a target. Okay. Now we're talking. Now we got a 5-minute chart. Right of the vertical is today's activity. And you could see what happened. 597 became a target. They got above. They centered around it for the most part all day long, but they certainly achieved the 597 discussed before the opening bell. And if above 597, the door opens for 598.10 and then 599.05. We'll just put the higher one up on the board for now, 599.05. There's a method to the madness because 932 598.10 to 599.05 is an overhead resistance zone where we would expect a reaction back down for a scalp with potential. And now you can see the whole picture on the board where we've got both numbers up, and you can see they came to the midpoint phenomenon basically. They rallied up, they achieved 597, they went up into 598.10 to 599.05 zone, and they pulled back to where? 597, knowing it's an important number. Do you think traders who were short had that as a target for an exit? And the answer is, yeah. What I urge you to do is pause the video, read the notes, and go back to the chart and double check the work. 941, and there's your pullback from within the resistance zone between 598.10 and 599.05. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here, everything traders need to be successful trading the S&P during the trading day. Don't forget, we also have a list of markets. What I would do if I were you is write some of these numbers down. Go see how the market reacted at some of these numbers. Go see the quality of the work that produces these numbers. Just for fun, we're on Magic Calculator Alert. I want to show you the ES. One of the traders in the live room took advantage of this information who has access to the Magic Calculator. Let's take the low of today, the opening low. This is the pit session low, 59.9675. I'm going to put that exact number in the Magic Calculator. I'm going to hit calculate, and now I'm going to come up with a list of resistance numbers. They're not all going to hit in the same day. We're interested where price is at particular points in time. Let me show you what I mean. Let's look at the second number down, 6,035.53. We'll round it up to 6,036. There's your 6,036. Now let's drill down to, for example, a 5-minute chart. And what you see here is, look what happened, and I subscribe to and talk about this all the time in the live room. I subscribe to the first time, best time situation, but you can see here that there was certainly a pullback the first time they got to 6,036. Pretty interesting information. Magic Calculator. It's another tool in the toolbox. We use it in conjunction with everything else I teach. It gives us a huge edge on basically everybody else. What's going on over in Camp IWM? Any interesting information over there? Did they do anything out of the ordinary? Well, we could say they're basically just trading in between the 50 and 100 period moving average, eating some time off the clock, building energy to challenge the next break up candle or breakdown candle high in the sequence. It was a 1% down day. They were flat at one point early this morning, so they were down $2. So it was still a down day, but they're basically eating time off the clock up in this range over here. Now, if the structure of that changes, then we'll change our tune. But this right here is building energy in a channel until proven otherwise. Be the umpire calling balls and strikes. Where does that really change? I'm going to say below 224. Below 224, that's going to begin to change, and we'll call it break the chain. Now, what about the folks down at the transportation department? Canary in the coal mine. The IWM, or small cap space, is my favorite market leading indicator. But the transports being the second favorite market leading indicator, they're the number one canary in the coal mine. They were up 242 points today, 1.5%. What's going on over there? Well, one thing this tells us is it certainly wasn't a broad-based sell-off. They closed, at least today, above this breakdown candle high, but this is a weekly chart. This high here, 16,704.05. That's going to be important by the end of the week. How good was 15,730 that we talked about before price got there? Anybody remember that one? What about the Q people? They got smoked today. Look at the volume down here. Really big day, big down day, $15. You can't minimize that. It also looks similar to this day, doesn't it? If you just filled all this in with red, because that's what it is, all right, there's a gap, but you can't see it like this candle, but it's really the same thing. And what did they do? They got to the entrance of no man's land and had a bull-bear battle. Does that sound familiar to anybody? Because this is one of the things that I teach in the MSF Masterclass among a whole host of other items just like that. Now, what happens if you had a magic calculator number that coincided with an important place that we know because all charts act and react the same way? You begin to build what's called a full stack situation. Well, why don't we go find out? The high over here, it's this candle, is 533.82. Let's go over to the magic calculator. We plug in. I've already done the work. 533.82. Let's focus on the third number down, 510.97, and see what happens when we put that on the chart. Man, that's pretty interesting. It's pennies away from this low here, 511.46, which is the entrance to no man's land, and it's not that far from today's low. You see how we begin to build what's called a full stack situation. The calculator is packaged together. It's included in the MSF Masterclass. How do you like dem apples? What about the financials? Any problem over here? No, they're up 56 cents today, or 1%, challenging the former high, while the tech space was getting whacked, taken out behind the woodshed, shot 3 times. This is what you call a bounce off the 20-period moving average right back to the former high. She's in an uptrend. The trend is, in fact, your friend. Now, Smashmouth is a whole different ballgame. Tremendous volume, big down day, gapped underneath all the moving averages, tried to recapture them, couldn't do it, fell away. This is trouble because this is a good proxy for the tech space. If you don't get a snapback pretty quick in here, then there's going to be more downside across the board, across the markets. When you look at the weekly chart, you can see here, if they're going to give up the last breakup candle low in the sequence and the 50-period moving average, and again, it's a long week. This is Monday. We have till Friday. They can do a lot of work / damage either way between Tuesday and Friday. But if they're going in the southern direction and they give up this moving average, they're going to be down at 216, 217 before you know it. Today, they're at 237, 238. That's a long way off. Write that down. Put it on a sticky note. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.